Well, I think if you look at how markets are performing today, there's certainly that expectation's being built in. Obviously, we're down, say, for example, in Asia, 13% in US dollars so far this year. A little bit of central banks talking up the markets is a little bit welcome right now, I think.
Is it a dangerous game, though? It was easy money that arguably got us into this mess. We need to address the structural issues here. And if the central banks are just going to throw more credit into the system, doesn't that just postpone the inevitable?
Certainly that's the risk. And let's say if we take the specific example of Japan. So, Kuroda came out a couple of times in the last 2 years and kind of surprised the market with the size and I guess extent of what he was doing on the monetary side. But also kind of saying, well, we need the government to follow through on the fiscal side and the structural reform side. And, structural reform is hard and it's slow, but things are ticking along in many many markets right now.
What's the baseline for what you think the BOJ is going to do next week?
Well, we don't have a specific forecast of what he would come out with, but I think if we look at the Japan market specifically, Japan was the best performing market in Asia and one of the best last year globally. And in terms of, I guess, the sentiment turn, the fierce sentiment turn we've seen over the course of the first 3 weeks of the year, people are selling where they can, where they've got profits. And I think you've got a real obviously we saw earlier up 5% today, a turnaround in that.
That's a remarkable move. And am I right in saying that the markets in Japan are now betting on dovish policy, on expansion of the balance sheet by the BOJ next week? Well, is that what this move is telling us?
I think that's probably part of it. It's also saying the market was extremely oversold over the last 3 weeks. There's exceptional globally competitive companies in Japan which were trading at a big discount to what they were 3 weeks ago. So I think it's all of those factors.
Was it somewhat disconcerting that we saw these pretty sharp down moves in the Nikkei and the Hong Kong market this week? These are mature, developed markets. You typically associate that kind of downside volatility with mainland equities, which you didn't really see. What did that tell you?
Yeah, well, what we've been saying, it kind of seems like it's cloudy, but no rain. The market seems to be worried globally about a sharp economic or global economic turndown, which we're not seeing, and there's not specifically any signs that it's about to happen either. So, as I said earlier, people sell what they can when they're sitting on profits, and so in the case of Japan, we think that was part of the story there. I think that Hong Kong and 8 shares and China have all been wrapped up in this. Really undermining of confidence in the regulators in China really have a hold on things, which I don't think anyone believes anymore.
Does it come down to debt, EM debt, commodities debt, external dollar liabilities, which, to be honest, and correct me if I'm wrong, Kieran, haven't really been marked to market? If something goes belly up, if something implodes, there could be a cascade effect, and it's going to make this kind of volatility look like a tea party. Is that what the market is telling us? Because I just think that that's a story that hasn't really been given much attention.
Well, I agree with you that this is, the potential risk down the road. And so if we don't get growth, from our point of view, we think we are going to get decent growth, certainly in the second half of this year. If we don't get growth, then debt becomes a much bigger problem. But again, I agree, it's part of the story that's not being talked about, but it's a giant risk.
Where are we, do you reckon, in this down move? Are we close to a washout? Are we in the capitulation phase? And if we are, do you start nibbling on some of these beaten down sectors like, dare I say it, energy and commodities?
So the first part, obviously it's hard to call the bottom, but certainly you're seeing, from a technical point of view and also from a valuation point of view, things are looking extremely oversold and cheap. So, we've been telling our clients that it's probably time to start looking for quality names that you want to start to accumulate. Maybe you want to get a bit of stabilization, more than one morning's worth before that, though. In terms of sectors, I think, energy, for example, is an area where the debt problems could, and the debt markets are already telling us there's potential problems there.
Especially on the high yield side in the US, right?
Exactly. So I think I would, energy, probably not. Commodities, maybe not right away.